Hello, it's Jeffrey Christian, CPM Group. It's a little after 12:30 in the afternoon on the 21st of December here in New York. This will be the last broadcast that I record for the year. I'll have a fresh broadcast on January 4th. We have another broadcast that we recorded last Friday, part 2 of the How to Invest in Precious Metals video that we released on Friday. Part 2 addresses the issue that several commentators have had, which is, so what does cause the price of gold to rise and fall? So we'll release that next week at some point. I wanted to talk today about lessons learned in 2021. 2021 has been a pretty interesting year on certain levels, both on a global basis and in terms of national politics, international politics, economics, and there have been a lot of people, new investors on a retail level at least, that have come into the precious metals markets, especially gold and silver this year. So talk a little bit about what happened in 2021, some of the lessons that some people hopefully have learned in 2021 about the precious metals markets and about the world at large. I want to talk a little bit about what a gold-backed bond is, and then I'll end with one last thing that I hope that some people have learned, which is the importance of knowing who you are. A 1909 Tsarist Russian 5-ruble note, piece of currency, backed by gold. I'll talk about it a little bit later. It was given to me by my brother Bill, who collects currencies, coins, and notes. Decades ago, he gave it to me, and talk about that toward the end. So what did and did not happen in 2021? Well, gold prices reached a record level. You know, I showed you the chart on the left here through December 9th, give you a longer term perspective going back to 2010 on gold prices. And then the other chart over here is 2019 through 2021, just the last 3 years, so you can focus on it. Gold prices, actually, this says 9 December, but it's actually 20 December. Gold prices through yesterday have averaged $1,798.97 for the nearby active COMEX gold contract that we use. That's 2.5% higher than the previous annual average record price, which was last year's $1,755. And you can see here, you know, the gold price is at record levels. It did spike up over $2,000 in early August of 2020, and it's come down from there, but it is still higher than it has been for virtually all of the time prior to August 2020. And while it has come down, it's stayed very high. So you have record gold prices. Silver prices didn't set a record, but they, you know, rose sharply in the middle of 2020 into that first week of August, and they have come down somewhat. It's very funny because one of the trolls criticized me by pointing out that silver prices are high. They are high. They're 61% higher than what they were in the average price in 2018. And if you look at the longer term chart, you can see they're significantly higher, roughly 60% higher than they have been from 2015 through the first half of 2020. So silver prices are higher. It's something that you have to admit to yourself if you want to be a savvy, successful investor. So what didn't happen? Well, let's see. Silver prices didn't rise to $100 or triple digits or anything else. There was no squeeze on COMEX. I mean, there was one day when the price spiked up, and that was it. COMEX inventories, both registered and eligible, are either at record levels or near record levels. The world didn't run out of silver. Physical demand was adequate to meet both fabrication demand for silver in a number of uses as well as investment demand. So we're not in a crisis mode in the precious metals markets. On a global basis, you kept hearing that the dollar was going to collapse, the treasury market was going to collapse, the US government was going to collapse, any banks were going to collapse, and none of those things happened. The dollar and other currencies were not recalled. there wasn't a great reset or global reset. None of those things that the carnival barkers kept telling you you had to worry about happened. It was a year where actually economic activity, believe it or not, was relatively good. We do have an inflation problem, but economic activity was relatively good. So what did happen? Globally, the major problems were political and social. January 6th was a very critical event. And I happen to agree with retired Army generals who say, if you think that January 6, 2020 was bad, the next inauguration is setting itself up to be, and I quote, really scary. And it is. We have a very significant constitutional crisis in the United States. We have a lot of other global problems, and there are a lot of problems in other major countries and economies that did happen this year and got worse this year and will continue to get worse in 2022. COVID stuck around just the way the experts, the intelligent, knowledgeable people said it was. It proved itself was not a fake news. I should go back to what didn't happen. JFK and John didn't reappear in Dealey Plaza. So something else that didn't happen. In terms of the economy and the markets, investors have remained interested in gold and silver, and they've been buying gold and silver at levels that are significantly higher than what they were buying in 2018 and 2019. And I mentioned the higher prices in gold and silver this year and the second half of last year and this year. That is a reflection or a manifestation of the stronger investment demand for gold and silver. We have had an influx of new investors, some institutional investors as well as retail investors. And some investors have learned to question or even ignore the hucksters, the snake oil salesmen, the carnival barkers, whatever you want to call them. The people who want to scare you into buying gold and silver because the world's going to collapse, the dollar's going to collapse, Hillary Clinton's going to make you use the same bathroom as the opposite sex. All of those things that could go wrong. Some investors have actually begun to learn to tune those folks out. Some investors also learn to shop around for reasonable prices, especially when it's some of the more egregiously overpriced coin dealers and bullion dealers who are paying for or outright participating in the fear-mongering of the carnival barkers. So it's been an interesting year. What are some of the lessons learned? I have three areas that I wanted to talk about. The interconnectedness of everything, politics and markets. Everything is interconnected. And the problems that we've seen in US politics and US society are part and parcel with the problems that we're seeing in the precious metals markets. It's just that the relationship's not as simplistic as a lot of comments suggest. I also want to talk about the basics of investing and analyzing markets and facts about gold, silver markets in general and the economy. So yes, everything is interconnected. Financial markets, the economy, politics, social trends, education, precious metals markets, other broader markets like stocks and bonds, everything's interrelated. But if you learned anything from these videos over the course of the year, it's that the relationships are very complex and interwoven, and they're not what a lot of folks assume they are. The relationship between gold and inflation, gold and the dollar, gold and interest rates do not lend themselves to simplistic ratios and calculations. Also, you have to measure apples to apples, not apples to oranges. So when you're saying, well, what's the relationship between gold and the dollar? You have to look at the relationship between the percent changes in real gold prices and the percent change in the dollar. Not the level of gold prices versus the level of a dollar exchange rate or index of exchange rates. And when you do that, you see that it's not there. And then, as I've made the point several times, a lot of times, for example, with gold and the dollar, they're reacting to the same independent variable. So gold's not necessarily reacting to the dollar, it's reacting to the same thing that the dollar is reacting to. Relationships are complex, and they don't lend themselves to simplistic things. And there's a lot of beliefs about gold as a relationship to inflation, the golden constant of purchasing power, that simply don't hold up to statistical scrutiny and empirical evidence. And I think hopefully that's one of the things that we've driven home over the course of the year. In terms of the basics of investing and analyzing the markets, I talked about the 4 sins of the intellect and the 4 virtues of the intellect. And that's critical. I made the point in last week's video about how to invest in precious metals, that you need to invest based on knowledge. You should never invest on your beliefs. If you have a belief, test it, and test it in an unbiased fashion. Don't look for confirmation. Look for actual evidence across markets and over time. And read the right stuff. Knowledge, you got to know what these markets are. Investing in precious metals without really knowing about them is like buying a gun and carrying it around without taking gun safety lessons and target practice, or driving a car as a blind person. Intelligence, you've got to have the ability to really analyze what you're reading and what you're hearing, and to think critically about what it is. And as I learned in journalism school, ask yourself, who's telling me this and why is he telling me this? CPM Group sells precious metals research and consulting. That's what we sell. Yeah, we're not selling you gold and silver. We're not waving our arms in the air saying, you know, the world's running out of silver. The third thing is you have to do it without illusions. Do not allow people to delude you. And you have to avoid self-delusion. One of the worst things that you could do is think that you know better than everybody else. I'm a guy, and I've been wrong on precious metals for the last 10 years, 20 years, 40 years. I've been wrong about the world's collapse. The dollar, the bond market, the treasury, the world has not collapsed over the last 40 years, although I keep saying that it's going to. And you know what? Those tens of thousands, hundreds of thousands of economists and bankers and financial analysts who understand all of this stuff, they don't really understand it, but I do. And if I had gone to college, I would be able to be more eloquent in explaining it. Don't allow people to delude you, and don't delude yourself. Always, there's more to learn. Invest based on knowledge and reflexivity. We really didn't really talk about reflexivity and what it is, but it is important, and it is visible in our shorter term market outlooks that we've presented over the course of the past couple of years of these videos. Reflexivity is the idea that if the price of an asset shoots sharply higher or lower, it's probably going to rebound in the other way. So you can position yourself to profit both from overshooting up and down and from the inevitable correction. And these are incredibly asymmetrical markets. The flow of information, the basis of knowledge of information is not evenly distributed across the market, which opens them up for the carnival barkers. Facts learned. There's been a lot that I've talked about over the last year. Silver and gold above ground inventories are ample, and they're actually pretty much at historic highs. They may be down from where they were in the middle of 2020 or the beginning of 2021, but they're pretty much at record highs. There's a lot of gold and silver lying around to meet demand. Ample mineable reserves also exist, reserves and resources for gold and silver and copper. And the intermarket relationships are not what they were assumed. I have a few charts that I've used, charts and tables that I've used. I'll just go through. Higher silver prices mean lower average ore grade. Earlier this year, there was the arrival of a whole new school of carnival barkers, snake oil salesmen, pretty much supported by people who sold overpriced precious metals investments to retail people. And one of the first things that they said was, well, we can squeeze the silver price and it'll go to $100 or $300. Another thing they said was that there was a conspiracy to suppress the price on the part of governments and banks around the world, which doesn't make sense. And the third thing they said was, oh, the fact that the world is running out of mineable gold or silver is visible in the fact that the average grade of silver being mined has fallen over the last several years from 13 ounces per ton to about 5.8 ounces per ton. And so people ask us, is this true? And it's not. The average grade has fallen, but the average grade has fallen for a couple of reasons. The primary reason is that the price of silver has risen sharply. And when the price of silver averaged $7, $7.26 in 2005, it wasn't profitable to mine at an average grade of 6 ounces per ton. You had to mine a higher grade in order to stay in business as a miner. But as the price went from $7 to $20 to $25 this year, you could mine a lower grade and still be profitable. And from husbanding your resources and maximizing your long-term revenue from your mine, that's what you do. It's not a matter of being foolish and not taking advantage of the higher price with the higher grade ore. You're still mining higher grade ore too, but you're also going back and getting that stuff that when the price goes back down, as it inevitably does, because silver is a commodity, you will have extended the life and the revenue of your mine. Again, reserves and resources, they're at historic levels. We're not running out. This is silver. You can get this in our silver yearbook that came out in May. We have data on gold that's in our gold yearbook that came out in March. And there, of the 57 billion ounces that have been mined over time, 80% of it came since 1900 with the advent and expansion of mechanized mining and organized, more organized industrialized mining. And about half of it probably is relatively identifiable. There's 3.5 billion ounces in coins and bullion held by investors primarily. And there's a lot of silver held in jewelry and statuary and silverware and sterling and religious objects. And about half of the stuff is gone, but there's still plenty around. And I should add that the fact that this silver is there doesn't preclude the price from rising. It precludes the price from rising and staying high. But this silver was pretty much all there in 1980 when the price went from $5 to $50. The same way that most of the gold, there was a tremendous amount of gold that existed at that same time in 1979, 1980, when the gold price went from 190 to 850. But then silver came back down to $3.50, and gold came back down to $250. So it's important to know that stuff. And then I'd use these charts. Managed markets lack volatility. You look at the gold and silver price, and these people say, oh my God, the price of silver fell because it must be a managed market. No, the left-hand chart is West Texas Intermediate crude oil prices from 2000 into 2008. And you see that long period of time where the price steadily rose in a non-volatile fashion. It started just about the time the United States invaded Iraq. And Arab oil countries said Sheikh Yamani was right in the 1980s. And as long as we don't cause shortages of oil, and as long as Americans don't have to stand in line waiting to fill up their cars, we can jack up the price. And it went from, well, this shows $20, $25 at the beginning. It had gotten down even lower on an intraday basis. It rose from $20 to $80 before things went crazy in the Great Recession and the global financial crisis. It spiked up to 140 and came back down. But that was a managed market. That was a market managed by OPEC. The right-hand side is a market managed by a system. There's no great man behind the curtain here with the US stock market. It's just that the stock market and the financial markets are set up to allow money to continually come in, buy back shares, decapitalize American corporations, and push the stock prices higher. So managed markets lack volatility. When you see volatility in gold prices or silver prices or oil prices, that tells you that the market's not being managed, or at least not being managed well. Now, what a gold-backed bond is worth. My brother's ruble note. Several things that are important. Okay, it's 1909, pre-revolution, Tsarist Russia, and there's a 5 ruble note backed by gold. Now, there are several things that are important. The Russian government defaulted. Well, they didn't officially default. They simply declined to honor the bonds and say, oh, you've got that bond, here's some gold. The Soviet Union was created in 1917, took over, and it declined it. And then the Soviet Union collapsed in 1991, and the subsequent Russian government also has declined to honor these bonds. So that's important. Number 3, they were backed by gold. That meant nothing. Nothing. Oh yeah. You have that piece of paper I gave you that's ostensibly convertible, payable in gold. Yeah, good luck with that. When the Soviet Union collapsed, there was a lot of gold that was in the Soviet government, and the Russian republics said we want our share of the gold. And the Russian government said, okay, well, gold reserves at the time from the Soviet Union ended were about 12.9 million ounces. So we'll divvy it up among the different former republics of the Soviet Union. And one of the republics actually hired CPM Group as an advisor and said, well, we think there was about 67 million ounces of gold that the Russian government, the Soviet government owned, and we want our share of that. And the Russian government said, well, we're giving you your share of our official monetary reserves. If you want the rest, go talk to the Russian army, because they're the ones that have that. So gold-backed bonds are not gold. If you want to own gold, own gold. And understand that throughout most of the last 6 millennia, currencies have been backed by gold, and it hasn't kept them from collapsing. The only currency system that hasn't collapsed is the current one. And most of the previous ones were backed by gold. The other thing which is current is during the 2016 election, people were asked Donald Trump, hey, we saw $1 trillion plus deficit in 2008, 2009 due to the global Great Recession and the global financial crisis, came back down to about 460, but you have all these policies that you cobble them up, and you're going to have not a spike up over $1 trillion in the deficit. You're going to have persistent budget deficits over $1 trillion, multiplying the size of federal debt quickly. Aren't you worried about the Treasury going bankrupt? Or people simply saying, I'm not going to buy more Treasury bonds? And Donald said, look, I'm not worried about debt. I'm not worried about deficit. If people don't want the bonds, we just won't pay them out, and we'll settle for cents on the dollar. That's what we've done with our Trump corporations. We can do it with the US Treasury. He was an exceptional person, but he hasn't left the scene, and he's taught a lot of other people to be equally exceptional in the way they think about the world. So the Tsarist note is interesting, and it's not totally irrelevant to where we are now, where we're going in 2022 and beyond, and where we're going both on a political and a social and an economic basis, all of which is going to affect precious metals investment demand and precious metals prices. Finally, I hope some people have learned to close their eyes and think, or go to church and pray, and think about who they are. It's a basic tenet that's not only very critical for being able to wisely and successfully invest, but it's also good across your life. Are you an investor? Are you a true believer? Or are you a purveyor of schlock? I want to go back and talk about that bond one last time. In the 1980s, we had a client, an asset management company in London. And when I would come to London, they would let me use one of their conference rooms as an office. The conference room's walls were lined with Russian and Chinese railroad bonds and other government bonds from the turn of the last century. All of them were great, beautiful bonds that were collector's items as pieces of art. None of them actually were paid off. So that's something about government debt. I thought of it because I have an anecdote here too. I'll tell you one thing. There's a great movie, great movie called Team America, in which somebody says there are three kinds of people, but I'm not allowed to use the words that they have used, but it's a great philosophy of life in that movie. But are you an investor? Are you a true believer? Doesn't matter what. Yeah, as one guy once said when he was debating me about gold conspiracies, he said, the problem with debating Jeff Christian is he comes along with a bunch of facts and knowledge, and he clouds the conversation. Do you think about investments and politics and everything else from a position of knowledge and intelligence and critical thinking? Or do you just believe and nothing that anyone tells you, no empirical evidence will change your mind? And then are you a purveyor of schlock? I have a friend and client. It's been my friend and client since 1993. And he made a tremendous amount of money in the 1990s. And he kind of backed away from business for a while, got married, had a kid, had another kid. And then he got back in and he's made multiples of what he had made in the 1990s. But when he was coming back into being much more active as an investor, we were talking one day and he said, the greatest thing about being a billionaire is that you don't have to talk to a bunch of people that you don't want to talk to. So this is the definition of happy. This is what makes anybody happy. When you're building a company or when you're working day to day, you have to talk to a lot of people who are true believers or purveyors of schlock or simply unethical people. And when you get to a certain level, you can say, you know what? I just don't need to talk to those last two groups, the true believers and purveyors of schlock. I can be happier and wiser without being bothered by them. And that is probably the best thing that anybody could learn, 2021 or beyond. Next year, first half of the year, our 3 yearbooks come out, April, May, and June. We'll have a Platinum Group Metals online seminar in January, a Metals and Energy seminar in February, Silver seminar in early March, and the Future of Gold in April. So a lot of good things going on. You can access our work by buying our yearbooks and other research, hiring us as consultants. We have a retail investor program that is designed to make our research and consulting services available to smaller retail investors. Most of our business is with institutional investors and family offices and high net worth individuals. But we have started finding ways to make our stuff available at a lower price point for retail investors. We will have quarterly forums. We will probably name the date probably in late February for the first quarterly forum. in the first week of January. When we come back, because of the crowded nature of our seminar schedule, we haven't set the exact date yet. And you can watch an intro to CPM group on the YouTube on that link. We produce research, we provide consulting, we help clients either as consultants or as actual managers in managing their assets, in managing their commodities exposure, and in investing wisely across the board. Have a good holiday season, end of the year. Today is the solstice, and we'll go from there. And I'll see you next year.